Today, we're going to be a fly on the wall inside a live trading floor. Our mission? To pull back the curtain on the high-pressure, high-stakes world of day trading, all the way from the pre-market chaos to a single critical trade at record highs.
And look, the stakes, they could not be higher. This one statement really sets the scene for the entire day. The market is in completely uncharted territory, which, offers incredible opportunity, but also some massive risk.
So let's start at the beginning, the morning. Now, the subtitle here says, "The calm before the storm." But as you're about to see, it's anything but calm. Okay, so picture this. It's 9:04 a.m. Eastern. We are just minutes away from the opening bell, and you can feel the energy building because these final moments are where a trader's entire game plan for the day gets locked in.
The first thing you notice is this unique kind of controlled chaos. It's not panic, not at all. It's intense focus. You've got traders scrambling to run their final technical checks, tweaking their systems, and just mentally preparing for the session ahead.
And on this particular day, there's another little wrinkle thrown in: contract rollover. This happens every quarter, and it's basically when futures contracts have to be switched over to the next period. Think of it like a mandatory system update that can cause glitches right when you need absolute perfection. So once all the technical stuff is sorted, the focus shifts completely to strategy. It's time for the morning briefing. This is where the team gets together, analyzes the market, and figures out their plan of attack.
A key term you're going to hear thrown around is divergence. So what is that? Well, imagine a car that's speeding up, but its engine is starting to sputter and cough. That's divergence. The price is hitting brand new highs, but the momentum indicators underneath, they aren't confirming it. It's a huge warning sign that this whole rally might be running out of gas.
And we are not talking about some small, subtle signal here. In the words of one of the analysts on the floor, it's crazy diversion on diversion on diversion. I mean, red flags are flashing all over the place, suggesting this record-breaking rally is a lot weaker than it looks on the surface.
The analysis gets even wider. So while the S&P and the NASDAQ are breaking records, other major indexes, think of them as their family members, like the Dow and the Russell 2000, are lagging way behind. This disagreement across the market is another major red flag. It points to some underlying weakness, and it's feeding this feeling that this is a highly manipulated market.
So, based on all of those conflicting signals, the lead trader comes up with a very specific and, honestly, a very risky plan for the market open. The strategy is completely counterintuitive. I mean, the whole market is screaming upwards, but the plan is to short the NASDAQ, to bet against that powerful trend. The idea is to wait for a very specific price, jump into the trade, and just scalp a quick 20-point profit from the tiny pullback they're convinced has to be coming.
The bell rings. The market is officially open. Now it's time to see if this careful plan can actually survive the raw, chaotic power of the market.
And right away, the price just starts to surge. We see 24,492. The momentum right out of the gate is absolutely incredible.
And there it is. It smashes through 24,500, a huge psychological barrier. The market is in a total frenzy, just pushing relentlessly higher and higher into uncharted territory.
It just keeps climbing. 24,517. That's the zone. That is the target. This is the moment of truth. Do you execute the plan or do you let it go?
He pulls the trigger. The trade is executed. He is now short, betting on a drop while literally the rest of the market is pushing for a new all-time record. The tension is just, you could cut it with a knife.
And his prediction, it pays off. The market pulls back just for a moment, and he gets out at 24,508, capturing a quick 9-point profit. Now, it wasn't the full 20 points he was hoping for, but it was a successful scalp, and it proved his analysis was dead on, even if only for a few seconds. A profitable trade like that is the goal, of course, but it brings up a really fundamental question. Where's the money for these trades even come from? How do traders get funded to make these kinds of bets in the first place?
Well, many traders get their capital from what are called proprietary or prop firms, and traditionally, this meant you had to pass a really difficult evaluation to prove you were profitable. But now there's a newer model, the straight-to-master account, which lets traders pay a higher fee to skip that whole test phase and just immediately start trading a funded account. And the entry point is, well, it's surprisingly accessible. This is a real promotion for one of those straight-to-master accounts. For just a few $100, a trader can get instant access to a funded account of up to $150,000. It's a pretty fascinating look at the real economics behind modern trading.
So let's pull back to the bigger picture. The key thing to take away from this day is that it wasn't just the NASDAQ. It was gold, the S&P, crude oil, currencies. Pretty much every asset class was surging in this massive, coordinated rally. Everything went up.
Which, of course, leads us to the final, lingering question. In just a few short weeks, the NASDAQ has rocketed up over 1,200 points without any kind of real pullback. We saw one trader successfully bet against it for a split second, but that upward trend is undeniable. So the question on every single trader's mind is, when does the correction finally begin?